Welcome, everyone. This is the second day of the Business Hot Seat Summit, How to Turn Your Passion into Profits. I'm so excited to have Ann Lobos as our first speaker this morning. Thank you, Ann, for coming. Ann has been such a trooper. So she was so helpful. It would have totally crashed and burned yesterday had it not been for Ann. Helping with her computer, and my computer and the connection was just awful. I had gone over to the mill, which is the incubator at Salt Lake Community College here in Sandy, Utah, so that I thought I'd have great connection, and it didn't work out that way. So today I am at home. I've configured how I could plug right into our internet. And like I was sharing, I am down in where our washroom is. I've got this nice virtual background. And so far, so good. I haven't been coming in and out, and it's actually recording, and I'm not freezing. So thank you, Jesus. Anyway, so a little bit about Ann. Ann is also on the board with the South Jordan Chamber of Commerce, or not South Jordan. Yes. Anyway, South Jordan Chamber of Commerce. She is our treasurer and part of educational committee, does a lot of different teaching. But one thing I love, Ann is a CPA, certified public accountant, but one thing I love is that she really cares about small businesses. She really cares about making sure that you are positioned for success, that you're positioned for income. I know that one of the things that I struggled with, and a lot of times I think that a lot of people do, they figure that, hey, so-and-so down the street is charging. So I was in the beauty industry. So-and-so down the street is charging haircuts for $20, for a haircut. I'm going to charge $15 so that I can get more clients. And you think, okay, so I'm super busy, but I'm not making a lot of money. Why am I not making very much money? Well, because I didn't realize that even my break-even point was maybe $17. So every time I'm doing a haircut, I'm losing money instead of making money. And I'm busy. And I think that that's true with any kind of industry. If you do not understand your numbers, you're going to fail. And so that's one thing I love about Ann. And so Ann, tell us, it takes a special person to really love numbers, right? So how did you get into this position? How did you get in this profession?
Funny story. I changed my major a lot in college. I started out as a mechanical engineering major. I was a psychology major, a teaching major for a while. And then I got married and I was like, I got to be done with this school thing. I've been in school for too long. And my friend was like, I'm going to become a CPA. And I'm like, well, what's a CPA? And she's like, oh, it's a certified public accountant. They do taxes and accounting stuff. And I'm like, I'm pretty good at numbers. I like to play around with my Quicken program. I should do that. So that's how I ended up in the accounting profession. And I got in there and I liked it and I was pretty good at it. So I ended up to get your CPA, you have to get a bachelor's degree. So, I'd been in school a while anyway. So I finished that bachelor's degree and then I was like, okay, I'm going to get my master's degree because I wanted to be able to get my CPA license. So that's how I became a CPA. In retrospect, because it's funny because about 5 years ago, I almost just gave up being a CPA because I was like, this profession blows. Like we're just cranking out tax returns and like we're not doing anything for people. We're not giving them real value. So I actually went and enrolled in a master's program for clinical mental health counseling. I'm like, I'm going to become a therapist because that'll be good, right? It can really help people change their life. And I got in that program and I realized money, psychology, they're actually not two different things. They actually kind of go like this. Yeah. So I think I'll stay in this profession. I've got a lot of years committed to it. Plus the school I was in shut down. So I'm like, okay, another reason why I'm going to stay in this profession. I'm going to just shift it a little bit to where, yes, I'm going to help people with their taxes, but it's not about just cranking out a tax return to the IRS, wants you to check the box and get done every year. It's about like actually getting out of life what you want, which is why I love small businesses so much. Is because people, when they start their business, I think of it as their baby. Like it's growing inside them, right? And they have this great idea. They're so excited about it, right? And they have these dreams of when they launch their business, it's just going to be so amazing. And I fall prey to this myself, right? I thought I'm going to get my website up and it's going to be up and then the customers are just going to flock in, right? You know, it's up and live and they're just going to come, right? And then you're like, okay, this kind of sucks. Like, you know, the customers aren't coming and it's like, you know, it's like a newborn baby that comes out and you're like, this thing cries all night. Like, what's wrong with it, right? I'm like, this business, it's not what I thought it was going to be. But so I just love working with small business owners to help them create the business that they dreamed about that can really become a reality. So
yeah, well, and that's one thing I love is that we, you know, and the thing is, don't you find that people are scared of the numbers? Because the numbers are reality, right?
well, and they think they're more complicated than they need to be.
Well, they don't lie. They don't lie though.
They don't
numbers
lie.
are numbers. Yeah.
Yeah, they don't lie. So you do have to be willing to face reality a little bit when you start looking at your numbers. But I think you've got to get over that fear, because facing reality means if you know where you're at, you can actually figure out where you need to go. If you don't know where you're at, we were just talking about this before you started the recording, you don't have clarity on where you're at now and where you want to be, you're never going to get there. And the numbers can play a role in it. It's not the only thing you need to know. There's so many other things you need to know. The numbers are such a big part of knowing, here's where I'm at now, here's where I want to be.
Yeah. And do you feel like, I mean, there's some misconceptions that I had about a CPA. You know, it's like, okay, CPAs are when you have big companies, you know, it's very hard to afford to work with a CPA. And so then you'll work with the bookkeepers and you'll work with kind of those accountants that do taxes and so forth. So what are some advantages of working with a CPA and, you know, and getting rid of those myths of?
Yeah, there are a lot of myths that, you know, CPA means it's going to be expensive, or it's going to mean that I can only do it when I'm a big company. I actually did a talk for Boyd Peterson on this not too long ago, on the difference between a CPA and like your bookkeeper and then you're just your accountant. And the reality is like CPAs, like I mentioned, I have to have a bachelor's degree and a master's. So I've got some training there, but just because I have that doesn't mean I know taxes. Because there's a lot of CPAs out there that specialize in auditing and they know nothing about taxes, right? So I think you've got to be careful with any profession, any accounting professional that you're working with. You want to make sure they have the experience in what you need them to have the experience in. If you're looking for someone that's going to help you save money on taxes, you are going to be better off with a CPA that's been trained versus, you know, just your everyday tax preparer on the corner that isn't trained. But if your CPA is not trained in taxes, you know, your HR block person might be a better way to go. You've got to make sure that you are getting out of that professional what you need out of that professional.
Well, and so I'm going to dive into kind of a few different things, and then I want to bring it back around with your one thing I love is that you look at profits. But before that, there's a lot of questions. So one of the biggest things about business owners is, and like we talked about yesterday in that, is that you don't know what you don't know, but also at the same time, you don't know what questions to ask when you're setting up a business, right? And I know that I fell into that. I had no clue. All of a sudden I was in business and just had no idea. I didn't know all the components. Same thing about, okay, for instance, this conference, you know, we were talking about that. I had no clue what the back end, how complicated, you know, I took this course, you know, and they're saying, hey, you know, you can do this. And this is a great way of meeting new people and speakers and audiences and so forth. But they didn't tell you all of the components that goes in behind the back scene. And all of a sudden you're stumbling and you're stumbling and you're stumbling and, you know, so with that is that, you know, you hear like the first thing, you know, is like, you need to be in business. So we heard like yesterday, you know, you need to be in business. What type of business? Do you need, you know, that question, because there's like the legal aspect, but there's also the accounting aspect. And so I want to dive in a little bit, if you don't mind. I mean, we really didn't talk about this, but I get these questions, you know, when I'm coaching with businesses that are getting started. What is the difference between an LLC An S Corp, a C Corp, and then also an LLC acting as if.
Uh-huh. Well, and it's funny you bring that up because even one of the speakers yesterday said you need to go get incorporated, and I'm like, okay, what does that mean? People say incorporated, and I mean, if you look at the word incorporated, that suggests you're a corporation. That usually doesn't. You usually don't want to be a corporation. You usually want to start out as an LLC, right?
Mm-hmm.
And so here's the difference. The LLC is that you now have some legal protection. So when you first start your business, chances are if you haven't become an LLC, you're what's called a sole proprietor. And what that means is you have no legal protection. Someone comes and sues you, they can get all of your personal assets. So an LLC makes it so you have a layer of legal protection. So really an LLC is legal. It's a legal justification for becoming an LLC. And as long as you're running, I'm going to give this caveat, as long as you're running that LLC correctly, you will have some legal protection. If you are not running it correctly, it's a waste. Like you're not going to have any protection. But that's probably another conversation. But anyway, so you become an LLC, and then what you can do is, I mean, in some cases you might want to be a corporation, what's called a C corporation. And if a business is going to be raising a lot of capital later, and you're going to want to have a lot of investors, that's the way to go. But for most small businesses, you will want to start out as an LLC. But then it gets complicated because you get to decide, do you want to be taxed as not, the IRS doesn't have a tax classification of LLC, they have a tax classification of a partnership. So do you want to be taxed as a partnership, or do you want to be taxed as an S-Corp? And so an S-Corp, again, it has the word corporation in it, but it really does not mean you are legally a corporation. If you elect to be an S-Corp, you are still, and you started out as an LLC, you are still legally an LLC. That is your entity type under the law. The S-Corp thing just means it's a way that you can get taxed differently. And I actually just did a course on this that I'm going to be releasing probably within the week called Making the Most of Your S-Corp. Because what happens is a lot of people think S-Corps, oh, great, this is going to save me money on taxes. Yes, it can if you use it properly. If you are not using it properly, it's a waste. Like in a lot of ways, you're paying more in taxes and you're having to run payroll and you have to do all these things that you're not saving money. You're actually spending more money than you would if you just stayed in an LLC. So that's kind of the difference between the S-Corp term, which is, again, a tax classification. It is not a legal entity type. Legal entity type is an LLC. It's a partnership, which you don't see very many of those these days because the LLC is usually a lot better, or a C corporation, or kind of the different entity types that you can choose.
Okay, so with that, so you're LLC and you're doing your taxes. So if it's you and your husband or the LLC, then I file it as a sole member LLC, or
I know there's another layer of complication there, right? So if you're an LLC and you're the only owner, which is just you, so technically if you and your spouse own it, you are not a single member LLC, and then you need to go file a separate tax return. But if you are the only owner of this LLC, the IRS lets you still file that on your personal tax return, just on a Schedule C, which has its pros and cons. It's nice because you don't have to do a separate business return, but Schedule Cs are one of the most audited forms that the IRS looks at. So you've got kind of this pro and con. Do I want to file a separate business return, or do I want to have less of a chance of being audited?
So, okay, so I'm throwing back at you. So if it's you and your husband, then how are you filing as a partnership then? LLC
Yeah, so you're
partnership?
supposed to file a separate return, but again, it's either going to be the partnership return, or if you elect to be an S-Corp, you will file as an S-Corp return. Technically, you can be elected to be taxed as a C-Corp too, even if you're an LLC. It's more just, but that's like a whole nother, a whole nother conversation. Yeah. But the ones you see most often are you're an LLC taxed as a partnership, or you're an LLC that's elected to be an S-Corp, so you're taxed as an S-Corp.
Okay, and with that is then you need to have like a personal taxes, and then you have to have your corporate taxes, because now it's a corporate. And does that give you a little bit more liability then if you're filing as a partnership or a C Corp with the LLC versus filing it on your?
No, because again, remember the underlying entity type is the LLC or the C Corp. if you've elected to be taxed as a partnership or an S-Corp or whatever, a C-Corp if you want to be, that is a tax classification. That has nothing to do with legal liability protection. So the where you're getting your legal liability protection is from the underlying entity that the state sees you as that entity type.
Mm. And just a little bit, and mainly, one of the big things that people do is commingle their funds, right? And so is that, like they talk about the veil of protection with LLCs and C Corps and S Corps and so forth. I know that we had an S Corp and it was just a regular S Corp, and then we changed it into an LLC, and I put it as a single member. I don't know now if my husband realizes that he's probably not a partner. I'll have to tell him that maybe. But on that, we might need to talk and do some changing. But with that being said, is that I know that like with the S Corp, that you're supposed to have your minutes, and you're supposed to have, even whether it's yourself, it's you yourself, and and that you're supposed to have documentation and so forth. Is that the truth for LLCs as well?
No, so and you brought up the phrase piercing the veil. Because remember when I said, if you're an LLC and you're running it properly, then you get that legal liability protection. What you're talking about is if you commingle your funds, if you don't have a separate LLC bank account that you're running this business out of, you got income coming in, the expenses going out for the business, if you don't have that, then if someone comes along and sues you, they can make the argument that, oh, that's not a separate business. They're not running it like a business. They don't have a separate business account. And then it's all just mixed in with your personal funds and stuff. And so they can still come along and sue you and get access to your personal assets that are not in the LLC. So separate bank account is very, very important. Even with a rental property. So a lot of times people will use rental properties, LLCs, for rental properties. If you don't have a separate bank account, and really a separate bank account for each of those rental properties, if you have 5 LLCs and you're using one bank account for all 5 of those, you have not given yourself the liability, the protection that you think you've given yourself with those 5 LLCs, because you're mixing them all together. And so then they can come along and say, oh, they're just running this like one business. So guess what? I'm going to sue you over this property, and I'm going to be able to get out all these other properties that are in this bank account.
So do I need an LLC for, we have 2 businesses that we're running. I need an LLC for both of them.
It kind of really depends, because if you think that if one of them is more likely to get sued than the other, then you might want to, because if you separate the 2 out, if they sue, say you have a cooking business, which maybe there could be a lot of liability there, right? If someone comes in and actually physically uses your kitchen, could chop their finger off or whatever, right? And then say over here you have, some other kind of business that doesn't have a lot of liability potential. It might be a good idea to have 2 different LLCs. Now, what you can do is, like, let's say you want to have an S Corp, but you don't want to have 2 separate S Corps. You can have 2 LLCs, and then you can have 1 S Corp, and the S Corp owns those 2 LLCs. And this might be getting a little complicated, but that makes those 2 LLCs a single member LLC. And then what happens is it collapses in to that S Corp. So you're really only having to file 1 tax return, but you've now just given yourself some liability protection on these 2 different businesses.
And
this sounds really dumb. What is an S Corp? I've never even heard that term.
So it's, like I said, it's just a tax classification. So the underlying entity, you're still an LLC in the eyes of the law, or you're a C Corp, or you're a partnership. But when you elect to be an S Corp, you send a form into the IRS that says, hey, I'm an LLC or a C Corp or partnership, but I want you to tax me as an S Corp. And so the benefit to an S Corp is that you can save money on self-employment tax. As long as you're running your payroll properly, you can save money on self-employment tax. And that's the benefit, is that it is a tax saving vehicle.
Yeah, well, and also with an S Corp is then you become an employee, correct?
Yeah, because you have to run your payments through a W-2, like through your payroll, so that you issue a W-2 to yourself at the end of the year. But then you can still have your distributions or your dividends, or what,
Yeah.
people like to call them dividends in corporations. So you can still have those. So you've got kind of two different payment types that are coming to you. Whereas in an LLC, all the money that goes to you is kind of just a distribution to you as an owner, right?
And then you pay, and then, so, okay, with that being said, so then you set up this S-Corp, and then are the LLCs like DBAs?
No, they're separate. They're an actual separate entity, because a DBA is not a separate legal entity. It's just, a DBA is just doing business as, is what that stands for. It's just saying, okay, I want to run, because you can have 5 DBAs for the same business. Like you can say, I want to run this as, so my class that I'm running is called the Morning Awakening. I could have a DBA called the Morning Awakening, and then I could have, a DBA called, I don't know, education, whatever. So I can have DBA, which then just means that under, I can legally use these names, but they're still part of this one company here. So when you have separate LLCs, with the one company that's maybe a little bit more legal potential for lawsuit over here, the other one over here, these are legitimately 2 separate entities. Again, as long as you're running them properly, right? 2 separate bank accounts. Separate the 2 out so that you can say, yes, I'm running this as a business separately. I'm running this one as a business separately.
But the S-Corp owns them.
Yep.
Okay, so the S-Corp is doing all the, yeah, that could get, but that also then puts you almost like 3 layers of separation, if you will. And that, right? I mean, because
sort of. I mean, the S-Corp wouldn't really have a reason to get sued because they're not running stuff from it. It gets complicated. It really does. And it kind of depends on your situation, whether you'd want to complicate it with 2 LLCs and one, and the one that owns the LLCs would still have to be either a legal LLC or a C-Corp or a partnership, right? I mean, it still has to be a legal entity. It's just elected to the IRS to be taxed as an S-Corp. So it's still its own entity. Does that make sense?
Yeah. But yes, and so that's, I mean, these are like those questions that, when they're just starting business, that they're not a clue, right? It's like, okay.
And they're very important too, because a lot of times what people will do is, they'll say, oh, I'm going to go start this business with my buddy. And Utah makes it very easy to set up a business. So you can go on their website, you can fill out the forms, and it will kick out this boilerplate, what's called an operating agreement, which is usually okay if you're the only owner. The minute you get another owner involved, you don't want their boilerplate form. It's going to kick out, because what happens if 6 months down the line you hate your business partner and you want to go your separate ways? You have a crappy operating agreement that doesn't specify what happens if you part ways, right? And so one of you is going to end up not being happy. Maybe both of you will end up not being happy with the way the business ends up getting split.
Right. Well, and also is what if one of them dies?
Right.
And who's the next partner, right? And so we
one of them dies, then you are all of a sudden a partner with their spouse. And if you hate their spouse,
or their family,
all the more reason why. In the setup, it does cost money to have an attorney help you set those up. But if you are not the only owner, it is worth it.
Yeah, to definitely have them look at it and so forth. Yeah, absolutely.
That applies if it's your spouse that you're with.
Not as much. I mean, I guess unless down the line you're going to get divorced from them, then you probably would want to have,
that's not happening.
Yeah. But a lot of times, so, I mean, it gets ugly with, like they'll say, well, we're married, and so my spouse is, partner with me. However, if they're not physically doing anything within the business and so forth, and you get a divorce in that, I've seen some ugly battles with, the partner, maybe not paying the bills. That partner was, one partner was supposed to be paying the bills. They're not paying the bills, and I mean, businesses are lost.
Right.
Through divorce. And so if you just got your spouse on there just because.
Well, and the thing is if you have your spouse on there and you're an LLC, you've now just made it so you have to file a separate business return.
Yeah. Yeah, so what my before, because I would have this business and I'd start this business, and and finally my accountant said, why don't you just have, because we had the corp, we had the S-Corp and that, and so I get another DBA and this DBA, and she says, why don't you just create titles? Yeah. Because it's like, oh, I need to have another, DBA if I've got this business.
Right.
She said, just have a title, and it's like, oh, you don't have to have a company for everything that you do. It's just within that company. It's kind of like different departments, right?
Mm-hmm.
And so with all of that, so talk to us a little bit about, like I said, in fact, I was talking with a client yesterday, and we were talking about knowing when to add another service. Knowing when to, and first of all, it's like, okay, so finding out how much it's going to cost so that you know how much to charge. So you've got that, break even and so forth. But you've also got an algorithm that you offer, but also talk to us about, profits and why that's important.
Well, we all started our business for profit, right? It's amazing though, after, you start your business and then things get rolling in. And like Lisa said, even with her conference, when you start a business, you do not realize how many hats you're going to have to wear. Oh my gosh, I'm going to have to be the marketing person. I'm going to have to be the salesperson. I'm going to have to be the accountant. I'm going to have to do this. You don't realize that when you start until you actually get in the business and you're like, oh, well, this is a lot more complicated than I thought it would be, right? And so it's very, very easy to forget profit is the reason you started your business, right? Whatever you want to accomplish in your life, you need profit to do that. And so I am a big stickler of talking about and focusing on profits. And so Lisa knows that I love this system called Profit First, because the whole point of it is to help you remember profits. Remember, that's why you started a business, because you go along and you start focusing more on expenses. Even if you look at the traditional profit formula, you've got sales minus expenses equals profit. So what is profit? Profit's the leftovers, right? If I sell enough and my expenses are low enough, then I might have something left over. Well, that is BS, right? We didn't start ourselves to start a business to have profit be the leftovers. Profit, it should be the main focus. So even if you just shift that formula around, so it's sales minus profits is expenses. So we make expenses the leftovers. And so the focus being, what is your profit? And so I'll ask people, okay, where do you want your business to be in 5 years? And they'll say, oh, I want to have $1 million in sales. I'm like, okay, what does that mean you take home? And they'll look at me like, isn't that why you started your business? The correct answer should be, in 5 years, I want to be taking home $250,000. Great. Let's go figure out then, what do your sales need to be and what do your expenses need to be limited to get you to that $250,000 profit, because that is why you started your business. So Profit First it's a great system. It's a cash management system. I think a lot of people think that cash management and accounting are like this, but they're really not. They're two separate things. Accounting is tracking your numbers, which is very important, but it's looking at stuff from a historical perspective. Even if you're looking at your data tomorrow, you're still looking at it from a historical perspective. Cash management is the here and now. I've got money in the bank. What needs to happen with that money to make it so I'm getting paid what I want to and that I'm only spending what I can on expenses, right? So Profit First is all about that, helping you see how to manage the cash coming in and the cash going out in your business. Because 70% of businesses fail, and the number one reason they fail is because of cash flow. Mm-hmm. And sales obviously is a part of that cash flow coming in, but there's all kinds of stuff going out that businesses are not managing properly to make it so that they are getting that profit that they need to get out of their business. And so with Profit First, it's again numbers, but it's not scary math, it's percentages. So you're looking at, and I did a Facebook Live on this, so I pulled this out, but we're gonna play with toys today.
Ooh,
this is my daughter's little cake toy. Here is your sales cake. So you need to divide that sales cake into pieces. And so first piece, and it might be backwards. Is it backwards?
No, it's not. No, it's
the first piece is profit. Most important piece. The next piece is owner's compensation. Now, people will say, what's the difference between the two? There is a big difference between the two. This owner's compensation is what you get paid for doing the work in your business. It's if you had to go out and hire someone else to do what you're doing, that's your owner's comp. What would you have to pay them? The profit, that's the awesome stuff. It's like that dividend check you get from AT&T just because you bought AT&T and the stock went up, right? That's your profit, is that if you were to sit back and you didn't have to do lift a finger in your business, you would still be getting profit. So owner's comp, profit, those are two pieces of the cake. My business has a charity piece, so I take a piece of my profits, my gross profits, and put it towards charity. And then you've got your tax piece. So as you're going along, and people don't realize this, especially new business owners when they start out, they don't realize that your estimated tax payments are based on last year's income. And the goal, of course, is that your income's going up like this, right? So if your income's going up every year and you're basing your tax payments to the government on last year's and it was lower, you're going to get stuck with a tax bill. So this piece of it is going to make it so you don't get stuck with a tax bill, because you are putting money aside throughout the year based on what's going on in your business this year, not last year, this year. So it's got a tax piece, and then it's got the expenses piece, which is the leftover. After you've allocated everything to all these other pieces, your profit, your owner's comp, your taxes, you have expenses that are left. And this is what you have available to spend on your expenses if you want to make that profit target that you're going after. And I can tell you from personal experience that knowing that I've got this much money for my expenses, if I have an expense that's bigger than that, and I have to actually physically move the money to make it so that I can pay for that, if I have to take it from my profit account, it is so hard. So all of these are bank accounts. You basically have an electronic envelope system for your business. And a lot of people are like, oh, that's too complicated. There's so many bank accounts. That's just so complicated. And to that, I always ask them, okay, tell me what you're doing right now to run your business. You're looking at this balance at your bank account. You're pulling up your phone. You're looking at your balance. And in your mind, you're mentally calculating, okay, this is how much I need to be earmarking for taxes. I need to be able to pay myself next week so I can make my house payment, right? I've got this expense coming in next week and I need, so you're doing all this mental math that I can guarantee you is wrong. So instead, with the profit per system, you've got different bank accounts. So you don't have to think about, okay, how much am I going to have to allocate for taxes? Because it's already there. This is your tax account. This is how much you've got set aside for taxes. You don't have to think about, okay, I've got to, what am I going to have to spend for expenses? What's going to be coming out? This is your expense account. Like, you know, the balance in that account. This is how much I have available for expenses. And most importantly, you have your profit and your owner's comp pulled out. And it's not, you don't have to do mental math to figure out how much you're going to have to pay yourself next week. You know, this is how much I have available to pay myself. This is how much I have available for my profit that I'm going to get this just distribution at the end of the quarter. So it is so much, I can tell you, it is so much easier because I do this in my own business. I'm not just telling you to do something I don't do. I do this myself, and I'm an accountant, and yes, I could sit down there and I could do this complicated spreadsheet and figure out where everything needs to go, and I could avoid the bank accounts. But let me tell you this, the problem with the spreadsheet is you have to update it to know where you're at. If you're looking at bank balances, you don't. You have to pull up your phone and say, oh, great, I've got this much in my profit. I've got this much available for expenses. You don't have to update anything, because as a business owner, and I realize I'm an accountant, but my bookkeeping honestly falls at the bottom of the list. So my bookkeeping is not up to date. So if I have to go in there and up to date my accounting to know where I'm at, it's not going to happen. I've got too many other things on my plate. So you've got to have a system that you can immediately know how your business is doing, to know how you can spend your cash and make sure that you're getting that profit out of your business that you want.
So when you look at, you know, because it's like, oh, this sounds so good, right? And you're looking at it and you're thinking, okay, my cash flow right now is 0 or minus. And that, what are, you know, and this seems like it's so overwhelming, you know, because you go to the bank and they say, okay, I need to set these up. You know, and it's like, okay, so you have to put in like $100 for this account to set it up. And that doesn't mean you have to keep $100 in there.
Right.
You just have to set it up with the 100, and then you can withdraw.
Right.
on that. But what are like maybe even what's like the first, I guess maybe the first step, if you will, in that, because it's like, okay, what do I need to do first?
So the first step is to set up the accounts. And I tell people, if
Okay.
you're freaking out, because you're going to have to set up 5 accounts. You're going to need an income account, which is going to store. And I did a Facebook Live on this, which is why I have like the little cake handy. So I happen to have a little diagram here handy that's
Yes.
old school. So you've got your sales bank account, and this is where you're going to store your sales in there until you're ready to move it around to your different plates. Then you've got your profit bank account, you've got your owner's comp, your taxes, and your expenses bank account. If people are looking at thinking, oh my gosh, that is so overwhelming, you start with your profit account and your taxes account. Those are the ones I tell people to go. And chances are a lot of people already they had to open up a checking account. So they've got a savings account attached to it, maybe even like 2, right? Because these can be savings. The profit and the tax can be savings accounts. So super simple, right? And then all you do is like twice a month, you just kind of look and see, okay, I'm going to move money over to my profit. And I always tell people to start with 1%. You just got to start somewhere, and you're just building this habit, right? You're building this habit of knowing as your business is going along and you've got sales coming in, 1% of that is going to go over to my profits. And the taxes, I mean, that one I kind of recommend starting with a little bit higher, because otherwise you're going to end up with a tax bill at the end of the year. But start with 5% there. 5% is going to taxes, and just run that for a couple months. And it's so fun to see that profit account. I had a client that texted me yesterday and he's like, I did my first distribution. I'm like, okay, tell me what you're going to spend your profit money on. And he's like, well, it's only $1. And I'm like, that's okay. You got to start somewhere, right?
Yeah, absolutely. Absolutely.
So
So
start there. If you're feeling overwhelmed with the 5 bank accounts, start with 2 other ones, the profit and the tax, and just build the habit of stashing that money over there for your profit. That's very important, and your taxes, that you don't want to get stuck with the tax bill.
And okay, so because I'm like, if I get audited, and I've been in business forever, and it's always like, okay, I need to get this done. I need to get this done. I need to get this done. Is that in essence, your personal account has nothing to do with these. That's when so your personal account is not your profit account, correct? Your profit account is your other one.
So it technically can. If you're the only owner of your company, your profit account can be a personal savings account. Your tax account can be a personal savings account. You want your income account to be a business account.
Mm-hmm.
If you have a separate expense account, you want that to be a business account. But technically, if you're the only owner, your profit, your owner's comp, and your tax bank account, they can be personal savings accounts.
Okay, so which ones need to be checking and which ones should be savings?
So you want for sure your income account, your sales account to be a checking. And I learned this the hard way. I opened up my accounts at the credit union. I'm thinking, oh, I'm just going to make this, because the credit union can sometimes be annoying, because you open up one checking and you can only have like 3 or 4 different accounts attached. So then you got to go open up another share thing. So you've got all these shares. I'm like, oh, I'm just going to make this a savings account, right? I learned the hard way that it's sometimes very hard to get your credit cards to deposit into a savings account at the credit union. So I would recommend your sales or your income bank account to be a checking account. And then your expenses account, you want that to be a checking account. The other ones, it doesn't really matter so much. My owner's comp one happens to be, my owner's comp is a personal account. And so what I do is when I move the money around when I move my money from my sales or income bank account, when I move it to the different buckets, I actually just transfer it straight over to my personal account, which is my owner's comp account. And that one happens to be a checking account, but it doesn't matter. That one could be a savings. The profit could be a savings. The tax account could technically be a savings.
Okay.
The owner's comp is a savings too?
It can be. Especially if you're just going to use it as kind of a storing thing. Because one of the things I like to recommend with the owner's comp is that, you're moving money into there periodically. But on the personal financial side, you are going to be so much better off if you have a set, okay, every 2 weeks I get, $3,000. So you're holding the money in there, but then you're transferring $3,000 over to your personal account. So that's why that one can be a savings. The owner's comp can be in savings. Now, if you want to use it as you want to have a debit card attached to it, because all the money in there is technically yours. So if you want to be able to have a debit card, if I want to go buy myself a, you know, a lunch at Subway or whatever, and I want to be able to take it straight from my owner's comp, then you would want that to be a checking account. I think it kind of depends on how you want to utilize that owner's comp, whether it's just kind of a conduit account that you're going to then just send the money over to your personal, or if you want to actually be able to use it as a checking account.
Okay. I think I need to get a few checking. I think I got enough savings accounts. It's like another checking. And then what ends up happening then is, like you said, you know, kind of is that when it's time to pay your taxes, you're not like, okay, we got to come up with, because we've done that too. Like, you know, when we were doing the S-Corp, it's like, okay, quarterlies have just come out. Okay, we got to come up with this money, you know, or, okay, we've got to pay sales tax. Okay, we got to come up with this money, or, you know, and so things are, you know, a little different. It's like, okay, I got to do this and I got to get this done and I got to take care of this. And I could see how simple. I could just, I think the first part is just the overwhelming. So I like, you know, I like how you kind of break it out, make it a little bit less intimidating. So tell us a little bit about what you've got going on and some of the different things that you've got, and that you've got a special for us as well.
I do. So I got a lot going on just because like I was, you know, like I was going to become a therapist. So I'm a big fan of looking at money and psychology. So when I'm looking at helping people, it's not just about cranking out a tax return. It's about, okay, how are we going to help you save money on your taxes, right? Because any money you save that you don't have to pay to the government, that gets to go to you, and then it's going to help you fund that extraordinary life that you're trying to create, right? So I'm a big fan of saving money on taxes, which, to be honest with you, unfortunately, a lot of tax preparers, you think that they save you money on taxes, but it really does take a different mindset to look at a tax return from a perspective of how to save money versus, do I have all the numbers in the right boxes? It's two different parts of your brain, probably. I don't know, maybe that's not true, but it seems like it's two different parts of your brain, where this is the one that's ticking and tying the numbers. This is the one that's playing tax detective and like, okay, how am I going to help people save money? So I do what's called a free tax analysis for people, and it's super fun for me. I did one for Lisa, and it's always just fun for me to do these because I get to be the tech detective. I get to look at your return and be like, okay, what's going on here? I know I'm going to have to ask them this question, but the goal of that is to help you save money on your taxes. And then I also, and it's probably going to get rolled out hopefully this month, but I'm a big fan of education. And this comes from me having to bootstrap and run my business from, you know, day one, just all on my own. I didn't have anybody. I didn't have the money to hire anybody. So I've had to figure things out. Tip for you, just a little side note, but tip. If you have a library card, a Salt Lake County library card, you can get lynda.com for free. And lynda.com is my best friend. Like I would say that 80% of the stuff that I learned how to do in my business, how to use different softwares, free. I got that for free because they have all these amazing video tutorials on how to do stuff. So anyway, so I'm a big fan of educating people. Even if you are going to hire someone to go do your bookkeeping, I want you to understand enough about it so that you know that if that person is doing a good job or not.
Yeah.
A lot of times people don't know. They want to ignore the numbers, and then they're just I'm just going to rely on my accountant or my bookkeeper to do a good job. And I had a client just recently that was a referral from a bookkeeper who I thought she did a good job, but when I looked at the stuff she was doing, I'm like, holy crap, she is not a good bookkeeper. So you need to know enough to know if your bookkeeper is doing a good job. So I'm a big fan of education. So I'm rolling out an education platform that all of my clients will get. It's going to have a lot of different classes in different areas on taxes and accounting, business growth, personal growth, financial growth. So it's going to have different taxes, education on all those things, because all of those things play a part in whether or not you're going to have a successful business and be able to create that extraordinary life that you're trying to create. So all of my clients that I do tax returns for are going to get one class every month. They'll get to choose from kind of the offerings I have, and they'll get one class that's included. And then the other ones they can, you know, pay for if they want. But so that'll be cool. And then one of the things that I do that's a little different is that because I am such a big fan of tax savings, with my tax packages, I do not let you get away with just doing a tax return. If you want to just do a tax return, you should go to someone else, because I'll be the first one to tell you you can go get it cheaper somewhere else. If you just want a tax return cranked out, So I make people, I joke with them, you have to see me at least twice a year because we're going to do a tax planning session during the year. And you get to choose when that is. Usually it's better towards the end of the year because you can kind of see how your income's falling out that year. We can see if there's any moves we can make. We can see how much you paid in, how much your looks like your tax liability is going to be. So you're not, you know, surprised with a, you know, with a big tax liability. So that all my tax returns include a tax planning session. So, and it's funner. It's a funner conversation, even though we're talking about taxes. It's a lot funner than just talking about, you know, your tax return. So.
Well, and I knew that, you know, when we did it, I mean, it was eye-opening too, you know, it was like, okay. And especially because you did the algorithm again on looking at what you wanted to bring in, you know, because a lot of times people say, okay, what's your goal for the year? And it's like, okay, well, I want to make, you know, $100,000 this year. And that, okay. And you think that, okay, that 100,000, you're thinking that's in business. Well, that's great. But then when you know, when you bring it down, you may only be bringing home $2,000.
Or zero or less than zero, right?
Right.
I mean, I've seen businesses that make $1 million and they don't take any money home. So that $1 million in sales goal it doesn't mean anything.
Yeah.
You've got to have a goal of what am I going to get to take home for my business? That's the important.
Yeah. And I think that's it's such an eye opener for me. And in fact, you know, again, looking at this, it's like, okay, Lisa, I really need to go and look at that again. And we actually kind of did a little bit of adjustment to your algorithm because we looking at services or how many clients, you know, I mean, so
yeah, I love to talk to people about, you know, even that number of I want to take home 100,000. What does that mean? Like, how many clients does that mean you need? So if you're saying, okay, I did this exercise with Lisa and with a hairdresser where I was like, she's like, I want to make 40,000. I want to take home 40,000 a year. I'm like, okay, what does that mean? And she's like, I don't know. Okay, let's figure out how much do you make on average per client? And she's like, oh, about $500. And I'm not going to do the math in my head because I don't do math in my head. But, you know, so we're like, okay, if it's $500 per client and you take 40,000 and divide it by $500, how many clients do you need? Okay, this is the number of clients you need for the year. Okay, let's take it a step further. Divide that by 12. How many new clients do you need this month to hit that target of $40,000 in take-home pay, right?
Yeah. Well, and then also deduct those expenses, you know, deduct all of that stuff again. And it's more than 40,000. It's like,
well, we'd already figured out because the 40 was her take home, and we figured out that in terms of sales, so you're right, because it wasn't 40,000 sales. She wanted to take home of 40, and then I think she needed sales of like 70,000. So then we ended up taking that 70,000 and backing into how many clients that ended up being. But we'd already figured out what percentage of her take home is of the sales number. So then we're not having to worry about expenses, right? We're just having to worry about, you know, this, we know that this take home amount is going to happen as long as we get that $70,000 in sales. And as long as we keep our expenses, you know, to this percentage that we had determined.
Well, and I know that one thing too is that having that tax planning, you know, and that you mentioned that is part of that because, you know, we talked, you know, and now we've got some land that we're selling and so forth. And it's like, okay, that could really throw a wrench into everything. And the interesting part is also is that I'm going to throw this out as, you know, kudos to you is know who you're talking to. And that because, you know, I talked to some lawyers, I've talked to, you know, some accountants and you know, and I got a gamut of all different kinds of advice and that, and it was so refreshing to talk to somebody that's, you know, that understands and is like, no, we can do it this way, you know, we can change it up. And so which can save a lot of money. I know talking with insurance agents, you know, they'll financial planners, all of a sudden they're talking to clients that have to pull out their life insurance or their, you know, their different accounts and losing, you know, millions of dollars because they, you know, they're at an age that has to come out and it's going to be taxed. And, you know, they talk to accountants and taxes and making sure.
Well, and that is the value of tax plan. So I also do financial planning. And the reason I do that is because when you look at someone's life and their goals, those two intersect so much when you're looking at investing, what they're investing in, the tax saving opportunity with investing. They're just together. They just need to be looked at together. And so So you're exactly right that, you know, the tax planning session is just so amazing because we're taking not just this 1 year out approach. In the questionnaire that I give people to fill out for my free tax analysis, I ask, what do you want to accomplish in the next year, the next 5 years, the next 10 years? Because, you know, you may want to sacrifice the savings for this year to save as much as you can. But if you're taking a long-term approach, even though you might save more money right now, in the long term, you're not going to save money if you do this. So you want to make sure that you're looking at your life in terms of what's the longer term goal here. It's not just about what's going to happen this year, you know, go out and buy a piece of equipment because I think I'm going to save money at the end of the year. Look, do you need that equipment? What are you going to do with, what are you going to be able to do with that cash in the long term that's going to actually get you to your long-term goal and not just look at it from this 1 year, you know, this 1 year picture.
Now, one last question, and we're running out of time, is do you only work in Utah, or can you work in other states as well?
Yeah, I have actually quite a few clients that are not in Utah. So I'm, you know, Zoom, when COVID hit, I was already Zoom. I found that people actually preferred to meet over Zoom, even the local ones, because they're so busy. We're just so busy that when you have to spend an hour of driving back and forth somewhere, that's an hour of wasted time. So I meet with all my clients over Zoom. Well, mostly. There's a couple that I still meet in person, but mostly 99% of my clients, I meet with them over Zoom. So I have quite a few clients that are not in Utah. So.
And can you do tax prep and so forth in other states then?
Yeah, there's a couple. Like if you came to me with a C-Corp in New York, I would tell you to go somewhere else because I've done one of those and that return is harder than the federal return. But I've done probably a return in almost every state. So if you come to me and it's a state that I'm like, I don't know about, I will tell you that. But I have done returns in most states. And so, yeah.
Nice. Thank you, Ann. And again, Ann helped so much yesterday with everything. And I told her, I says, I owe her so much. So again, thank you so much for sharing your expertise and the information. And I really do appreciate everything you've done. So thank
Thanks,
you.
Lisa. So